Good afternoon. This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute for Friday, January 24th, 2020. Let's start off with looking how the futures trade finished up this week, a summary for this week in Chicago. We had your nearby corn contract, the March contract, down 2 cents on this short holiday week to close at 387. The nearby soybean contract, March futures, closed at 902 with a disappointingly down 28 cents a bushel this week in this week's trade. March wheat futures closed at 573. Chicago wheat up a penny on the week. When we take a look at a few numbers that we got from the USDA when we came in this week and saw the inspections report, beans and wheat showed up as expected. We were below expectation on the vessels that were loaded this week for corn exports. We did get a export sales report today from the USDA. Corn was above average. That was great to see. We know corn exports have been really lacking basically for 3 to 4 months. There's been a lot of factors that have gone into that. We've talked some about that here, the strength in the U.S. dollar, as well as the quality of corn. Some of our corn that was harvested in the 2019 crop, as you all know, planted late, harvested late, and the quality issues are there. And a lot of Asian countries have chosen to source corn from the Ukraine here in the last few months. So we're hoping we'll be able to get some of that business back. The wheat sales numbers for this week reported by USDA came in as expected. We did just receive this week's commitment of traders report from the CFTC showing a short position, a growing short position by the managed money speculator in corn, and a brand new short position. Last week we were long in soybeans, but with that 28-cent downturn this week, they're showing a 13,000 futures contract short position and a growing long position in wheat. So what does all that mean? If the managed money speculator has a long position in wheat, they're telling us they think the price is going to go higher before it goes lower. And with the managed money speculator, that group of participants showing a short net position on the Chicago Board of Trade in consideration of futures, short corn and beans, they're telling us they think those futures prices are going to go lower before they go higher. We did get more information this week from various analytic firms showing the size and trying to estimate the size of the South American crop. And I think the take-home from any of those numbers that we've seen or any of the weather reports that we've seen this week, weather is still a benign influence on your futures price in Chicago in relation to corn and beans. Most of that really large growing region across those multiple countries in South America is receiving the rain that those crops need. It is coming into the peak of their growing season down there now, depending on where you're at, but you're not getting any help on your futures price in Chicago, but at the same time, we're not getting hurt any downward pressure on futures price from South American weather. We're going to be watching that more going into next week. The disappointing trade this week was really centered around high expectations after last Wednesday's signing of a U.S.-China Phase 1 trade deal, and we've just seen the speculators not find a bid, not really be looking to buy futures, more of a risk-off type mentality and selling the board, especially in soybeans. We know we had a gap in the futures chart in many contracts that are on the board, the nearby March as well as the November. Those gaps were filled this week, so that's good news. We got that out of the way, and now we can see how the speculators will trade the headlines as we move forward, watching South American weather and watching any progress with trade deals or Chinese purchases. One thing that has also been a bit disappointing, we haven't seen any flash sales announcement of any sort, corn or soybeans, since last week's signing. So we're just going to have to be patient and take the long view with this trade deal. We know that it opens up a lot of opportunity for U.S. ag products over the next 2 years. We're just going to have to watch those export sales reports and wait and see. We did see a lot of good momentum building in soft red winter wheat futures, soft red wheat futures this week in Chicago. We gave up almost all of that momentum, but we had a period this week where the speculators were buying contracts. A lot of you all got some new crop wheat priced, either hedged or cash forward contracts. Congratulations. Remember, these moves are going to be quick this year in the board price, and we need to get our open orders or our wish orders in to try to capture some of those moves. We are seeing some strength in local soybean basis, and strong corn basis is maintaining. So next week, give us a call if we can talk to you either about local basis or what we're seeing with trade issues. President Trump is going to be signing the USMCA on Wednesday. Look for that, and give us a call if we can help you. This is Robert at Virginia Farm Bureau's Grain Division.